Well, from Berlin, farmers taking over the streets, an unusual sight. Let's come back to Africa and talk about financial inclusion. It has advanced substantially in recent years. For example, sub-Saharan Africa continues to lead the world in mobile money adoption, which is driving financial inclusion in the region. The latest data from Global Findex 2021 shows that 33% of adults in the region have a mobile money account compared to just 10% globally. However, the region remains behind in terms of overall account access. Only 55% of adults own accounts from financial institutions or mobile money. And we see the bottom line of that. You have the women, unfortunately, women are just about 29% with mobile money accounts. Well, let's find out if we have done enough to handle this or there's something we're missing out. Joining us right here in the studio is Dr. Bumi Bajimo. She's the head Group Corporate Bank with EcoBank Transnational in Togo. Bonjour.
Bonjour, mon ami.
Please don't take me up on that. I can't do more than that.
Happy New Year.
Happy New Year to you.
And thanks for tuning with me.
Exactly. So talking about this issue of financial inclusion, it does deter a lot of development, implementation of government policy, which is why it is so important. And so even though there's accelerated progress, we're still behind. You know, when you have only 55% of adults in Africa owning mobile money and accounts with financial institutions, what's the hindrance?
Okay, thank you very much. Talking about financial inclusion, I think in talking about financial inclusion, you need to look at the global or broad macro index. So you have to, first of all, look at it. Does the operating environment allow for people to trust the financial system? And then speaking from an African perspective, I will speak out and then I will bring it back to Nigeria and what is happening. Let me take a country like Democratic Republic of Congo. The financial inclusion rate, the banking penetration is just about 7% for that significant number of people inhabiting the economy. And what has happened is due to legacy issues that happen in that economy. People just stop trusting the banking system. And rather than putting their monies in the bank, what you have is that on payday, you see these long queues in front of the bank waiting to collect their money. And what do they do with the money? Some people take it home, or some prefer to load it onto their mobile phones because they trust the mobile phones more than the banking system. So those are cultural issues in some respect. But if you look at what is happening across Africa, you know, the macro issues that have happened, the issue of inflation, people's purchasing power being eroded. So if you are not able to even meet the basic consumption needs, what then do you have left to save or to keep in the bank? Which is why every action that tackles the current inflation challenges in some markets across the Francophone, inflation has actually tilted downwards from 7% to now 2.2%. You see Ghana also from the high of 40 now at 26%. Across West African region, inflation, I think the outlier would be Nigeria, where inflation has remained stuck at elevated level. It remains stuck because of the structural imbalances.
You say sticky inflation.
Sticky, galloping, hyper, whatever you want to call it, because the fundamental issues have not been addressed. And that's why you see, so now if you look at, if you want to now measure banking, financial inclusion from a Nigerian perspective, if it's truly measured, I don't have the data right now, you will see that there is a dwindling because people's purchasing power, what 365 naira could buy last year is not what you can buy now. 365 naira would have bought you a dollar unit last year. Now you need 1,100.
So are you saying that the fact that the value of the naira is dropping is also a factor affecting financial inclusion or trust of the financial inclusion?
I don't think there's no issue with trust. I think the banking system in Nigeria has gone far above of trust issue. With the consolidation exercise, capitalization increasing, trust is not an issue anymore. And you've seen that despite some of the headwinds that we've seen, nothing has happened. Depositors' funds have been saved, no issues. The issue is around the elephant in the room. What do we do with the exchange rate? It's affecting everything. So if you see what has happened with the financial institution, and that's why you are talking about the issue of capitalization level having to be increased. Because as of last year, the transaction that the financial institution could do, they can only do half of it now because of the erosion in the value of their asset from a depreciation perspective. So what I would say is that rather than worrying about financial inclusion right now, worry about the impact of all of this macro situation on the ultimate consumers, the individuals, and the corporation. There is a bit of uncertainty in the market. What is our reserve level? What is the level of capitalization that banks should have? Where are we going? When does
I think the biggest one is what's the true value of the naira?
So the true value of the naira. So if you want to find the true value of the naira, there's something called the law of one price. It says that the pricing with you in your country should be the same in my country. So the price of goods, if you pick a unit of a biscuit, the price of a biscuit should be the same in Nigeria, to Ghana, to Mozambique, subject to the level of exchange rate. So the exchange rate is the dividing factor. And if you look at where the exchange rate is now, it means that with my inflation at 28.2 and the inflation at 2% within the Francophone region, it means that if purchasing power parity would hold, ideally, the naira should simultaneously devalue or depreciate by about 23% relative to the CFA. But the thing is that if there's anything I will leave you with now, I know we have constraint on time. It would be that, how do we solve this problem? We have a situation where the return that investors are supposed to get is actually negative. Your MPR is at 18.75. Inflation is at 28. Who will come into that market when and the TB rate is at 5%? In the US, if I take my money and I put it in dollar today, I can earn 9%, 11% comfortably. It's stable. So if there's anything we need to do now is to tackle this situation head-on. What will bring the investors back? Number one, the interest rate on their investment must be positive, meaning that anything you offer today must be above 28%. So you are looking at it depends on how much you need them. You need them in a crazy way. They'll make
it 30%.
Don't increase the rate on MPR because that will affect the SME commercial. Create an investment platform that anybody bringing their dollar into Nigeria for a defined period of time will convert it into local currency, can earn a certain level of interest. I would say if you are crazy, 35%. See what happens. But that alone will not solve the problem. You need to then allow them to hedge their inflow into the Nigerian economy. They will hedge it with, let's say, non-deliverable forward. If you can hedge them, then you can solve this problem. But until you've done that, we will continue to increase rates, continue to do all of this
Very crazy idea, some would say.
It is not crazy. It is reality. Increase the interest rate.
But it has consequences,
Create edge platform.
All right.
Give assurances.
All right, Dr. Bubi Banjuma. I know you always have loads. I remember when we met at Marrakesh too. I mean, we had to drag you off. Well, thank you for sharing your ideas with us.
My pleasure.
We really do appreciate it.